All right, good afternoon, traders, and welcome to the Bookmap Academy coaching and mentoring session. We do this every afternoon, traders, and welcome. We do this every Thursday at market close, and this is just part of the Bookmap Academy. As a member, this is what you get. Here, let me just go through a bit of it. If you guys are new to the program on YouTube. Just go to bookmap.com, click on the More button here. Under Community, go to Bookmap Academy, and you can sign up here. So it's a mentoring and coaching program, but it's a lot more than that. There are steps in here. You apply to the Bookmap Junior Academy. If you create good content in here, and we will give you feedback to help you create better content, then you'll be invited to the Bookmap Academy or Junior Academy, and that's a testing ground. You'll have a month, and you can repeat it once you're in, and you will create content for the month. And if you meet the qualitative and quantitative thresholds, you will be invited to the Bookmap Academy. This is where you can get Bookmap for free. If you double your quota, you can also get the MBO bundle and other add-ons for free. And then it continues on here. You can become a coach and you can get data for free. We're happy to extend these freebies to you. So as part of the Academy, you're giving back to the community. You can become a streamer as well. Tom B, Doug, and Moby are streamers. Moby's not streaming any longer, but anyway, you can go this route if you like as well. And then you can get other additional incentives. So if you're interested in that, just apply, and you can see the FAQs down here below. All right, so let's go through the disclosures here, and then we'll jump in. A few more things I need to go through, and then we'll get into the coaching. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only. Should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so a few different freebies out there. One is the new trading journal. I don't know if you guys have played around with that. It is excellent. It's just the I mean, we're really happy to offer this. It's you can kind of track your trades over time here, and then it shows you your biggest winners, your biggest losers, your total wins, your total losses, your profit ratios, your average winners and losers, and then it has your listing here of all the trades. So now this is just the minimum viable product at this time. Now you also have dates that you can select up here. It's going to be built out a lot more. All right, so if you're interested in this, Dan, I think you have the link for it. I do not have the QR code image at the moment. Let me see if I can find it. And you can take a screenshot of it if I can find it here. If not, just use the link and you can go into the Bookmap Academy, or in the area in the Bookmap Academy, and download it, install it. You won't actually need to install it. What you'll need to do is just sign up. What you do need to have running is this one here, trading statistics. You will need to add this for each instrument that you want to track. Okay, so you'll add this, and that's your trading statistics here. Okay, so this is a great tool, and it's a great coaching tool, and we're going to also add this to a lot more trading activities in here. We'll have competitions within the Bookmap Academy, etc. So okay, so it looks like Dan has the image here. Yeah, here it is. If you are interested in signing up for this, just take a screenshot here, and you can get access to this trading journal. Right? Thanks, Dan. All right, so anyway, wanted to mention that, and we're going to get more and more into the trading and the replay mode, uh, debriefing your trading. I don't know if a lot of you guys use that replay mode. In fact, one of our partners, Carmine Rosato, one of our educators, he will be hosting a webinar next week, and he's going to talk about that, how he uses it to debrief in replay mode. So we also had the webinar last week with Jack, and he talked about how he takes his trades on another platform, but he'll also take it at the same time within Bookmap, so that he can go back and revisit and replay those trades and learn from them, see how they related to the order flow. It is a really, really fantastic tool. So we want to see more and more of that in your content as we move forward. And like I said, a lot more trading activity, competitions, and some trade management. Jack wanted to mention something as well, and we'll see if we can maybe go over some of Jack's material a little later. If not, then next week.
Yes, sir. So I'm going to post this in the Bookmap Academy channel as well. But really, what I want to do is I want to take a second to shout out Vinny V. He's our current Blue Jacket winner. He's been working incredibly hard. I waited for this moment specifically to make sure that I could congratulate him on stream because of how hard he's worked. He's worked both um, with me within DMs. He's also interacted within the academy. You can really see just the overall approach to things. He's really using Scott's zones, and he's kind of got his own take on things. If you want to see what his trade was this week that I covered, it's in the Notion file in the Academy channel, as well as, of course, the Blue Jacket Award, which I just posted now. So Vinny V, if you're out there, buddy, congratulations, well deserved. After we're done with today, I'll be around until about 5 o'clock, 4 o'clock, probably 5 o'clock. Yeah, 5 o'clock CST in the Bookmap Academy channel, the voice channel, and I'll be going over a couple of trades with Alan. So if you have questions there, feel free to join in. You can listen, you can ask questions after the stream. So stick around if you have some free time. All right. Thanks, Bruce.
Yeah, sure. So what Jack is, guys, we have this stage room here for the this big event on Thursday, so we can share the stage with you guys. You can get on the mic, etc. But we also have a voice channel, like a breakout room during the week, and you can go in, talk to your coach or talk to whomever, and you have a discussion there to go through some trades and other things. So really nice feature, and it's great to have that access to the coaches. So take advantage of that if you guys can. You'll see it in the here. It's
one channel up.
yeah, the voice channel is right here. You guys can see
Yep.
this.
And if you
So
guys have questions at any time and you guys want, a little bit of like voice feedback, because text isn't necessarily the most precise form of communication sometimes, and you're just a little maybe vague on something and you want a little bit more nuance to it, just ask, just mention it, and we'll find some time to sit down and help you out with something. Maybe it's even a feature in Bookmap that you're not exactly sure how you want to toggle or what settings. Any of those kinds of questions, feel free to ask them, guys. That's what we can use the breakout room for. Any of that stuff, we can go over trades, all kinds of stuff. I plan on trying to use that a little bit more frequently for users as they start to get used to journaling as a whole. So look forward to that, and we'll try to use it a little bit more.
yeah, it's a great tool. We have it at our disposal, so let's take advantage of it. Yeah. So yeah, thanks, Jack, and thanks, Vinny. Congratulations on your win, and just really, really great work, strong work that you've been doing. I think if we'll try to get to maybe something later today from you, Vinny, but if not, then we'll go through you in more detail because we've been promising to go over some coaching with Donkey and Crash F16. So I wanted to first take a look here at Crash, and then open the mic. One of the things in here, like, it's going to be kind of more discussion with both of these guys. I mean, the content that both of them are creating is tremendous. It's excellent stuff, and you can see how they've gotten into a specific style of trading, how they've documented it, they're journaling it here, and then working through it in their journaling. This is exactly what we're looking for from the community, and how to support each other, and support yourself, how to get better. This is exactly what the Academy is for. All right, so let's start here with Crash, and we'll open up the oh, there we go. Okay, we'll open up the mic for Crash, and what I wanted to just kind of start off with, Crash, was and like I said, this is going to be a little bit different, more kind of open discussion here. The reason being is, like, you've been looking at this for quite a while now, is just higher time frame, and then you've been looking at ATRs for the day, and then adjusting your kind of expectations on lower time frames when you're zooming in and looking at the very specific entries and your trade management. So like this day here, just on March 4th here, you were looking for kind of a multi-day cycle, and you saw this kind of just blip up above here, and then this was at well, you're on West Coast time, so this is end of the, well, I'm not sure what time this is actually. Anyway, you can see that this was the high here, and then it just really dropped, and this drop here, this is the retest here, and it could just continue to drop. And so, yeah, I was really curious. I wanted to hear from you more about your higher time frame analysis.
Yeah, hey Bruce, hey everybody. Thanks for again for putting this on every week. Appreciate it. Yeah, I think when I'm trying to put stuff into the room, I'm trying to do a variety of information of the different techniques that I personally use. And so, I've done a ton of stuff, obviously, on Market Pulse VPI spikes with CVD that everybody, for the most part, I think is pretty familiar with. But I try to, I use a multi-component system, right? I use a cycle day system that has to do with multiple day cycles. I do an intraday cycle system. And then I do a sniping system, and then I have structured trade setups. And then I use Bookmap with Confluence to give me confidence in the other stuff that I'm doing. And so as I post different stuff, I try to post different parts of each of those components that I trade with, and try to share stuff that may not be completely typical for the average trader in his daily routine of looking at stuff. So this is just an example of where I'm trying to teach people or show people how I do it from a macro to a micro view. A specific trade entry using Market Pulse VPI spike CVD combination gives me very specific trade entries with very low risk, i.e. I can have, a 5-point stop max on most of my trade entries when I do that. But in this case, I'm trying to show a higher time frame, and, the couple pictures that I attached with this, I show a TPO profile in addition to Bookmap, trying to show where, in this particular case, we're at the end of a multi-day cycle, and you can see very clearly here on Bookmap. Again, this is in Pacific Standard Time, so you're correct. I'm on the West Coast. It happened to occur in Globex. So, a lot of people may not have been awakened for this particular event. But if you wake up in the morning and you see this when you wake up, then, you need to add that to your game plan now, or adjust your game plan from your pre-fight planning the night before on what you're planning on doing the next day. Or if you don't create a plan until the morning of, then, you add this to it. But this is just an example of, Bookmap providing the yellow brick road again, whether it's a macro view or a micro view. And it's very important to look at this and to see what's going on. But, understanding things like multi-day cycles, TPO profiles, structure within the system, being able to look at Bookmap with that understanding, it just paints an incredible picture. So like you see here, you see this little peekaboo head and shoulders formation at 1 o'clock in the morning Pacific Standard Time Globex. And it happens to be at the end of a multi-day cycle the previous day of RTH. So in my pre-flight planning for the next day, I know that at the end of one multi-day cycle, we're going to have a pullback because, right, the market never goes straight up and never goes straight down. You buy them to sell them and you sell them to buy them. And over the last 12 years, there's a 90% statistic that shows that on a multi-day cycle, that there is a positive 3-day cycle that occurs every 3 days. Okay. And so this is the end of a 3-day cycle right here. So I'm expecting some relative average pullback from the peak of the multi-day cycle top to come find a pullback, at which case we can then start a new multi-day cycle. So this is what this picture is trying to explain.
Okay, so I mean, because it was a little cryptic, that's why I chose it here. So what you're talking about is you're looking at your higher time frame TPO chart, and then you're noticing, you have your multi-day cycles, and then at this point here, you see this, this one last attempt to the high here, and it just totally fails.
Exactly.
And then so at that point, you're kind of like clued in to this cycle starting.
That's right, and it brings confirmation to my game plan, right? So it's not meant to be cryptic. It's cryptic in the fact that most people don't understand a multi-day cycle, and I can't put enough information on one chart to explain my 3 and 4 day cycle analysis that I use on a daily basis. So I just put tidbits here and there to kind of open people's eyes to the fact that there might be stuff that they're not aware of, and to start researching it, start finding out about it, start putting it in your cross check. If you don't look at a TPO chart, then look at a TPO chart. Look how Bookmap looks in comparison to your TPO chart, because looking at TPO chart is kind of difficult, right? But when you have this picture in combination with the TPO chart, it really brings a lot more understanding to that TPO chart and what you're looking for. So again, just trying to give tidbits of information that I use on a daily basis to help people understand. I've said it before, your quiver needs to be full of arrows. There's a lot of tools in the toolbox that you need to become experts on, and you don't want to be a one-trick pony. You want to be able to use all the different tools to your advantage, because what do they say? Whether you're trading prop firm accounts, they say less than 20% of the people that try to trade prop firm accounts can succeed at doing it. The average trader doesn't have over a 50% win rate. So you want to do whatever you can to be able to be in this game long term. And this stuff that I'm showing in here is just part of my process to where I want to be a long-term trader.
Yeah. No, great. I mean, because I was curious for me, how it was actually like a month ago or so, and then I really started to note it more and more. You were talking about your ATRs, and then looking for your much smaller time frame setup, and then scale. It was your trade management that was really great. Was you're looking at your trade management to I'm going to try to hold for 100 points here in the Nasdaq. Or whatever the ATR was at that time, and you got it on that chart. So you're, again, I guess, you have the bigger picture perspective here, and then now you're kind of zooming in and looking at the specifics for the intraday.
Exactly. And I trade in a trading room, that I have. There's people inside of Bookmap that trade with me, that are also in Bookmap, that also trade with me. during the day, and they can see, as they're learning this system, how this ties together with Bookmap. Because I've said before that Bookmap's, one of my greatest tools for putting all the pieces of this together. The yellow brick road, Dorothy, cannot be stressed enough. I did a post the other day where we had violated 12-year averages up and down, and I said something to the effect of, all I can say is thank the Lord for Bookmap, because when you have exceeded expectations from a structural point of view, now you can go back to Bookmap and see, hey, what's the order flow telling me now when I don't really know what else to expect because we've exceeded all expectations. So you've got to use Bookmap from a macro perspective down to a micro perspective, because just look at CVD and VPI spikes. They look completely different if you're looking at an hourly chart, right, versus a 5-minute chart. You spread out 5 minutes. And so during the day, at the beginning of the day, I've showed this before, right? I do a global view. I go back when I load up my Bookmap chart in the morning. I usually go back at least 36 to 48 hours, so I just get a more historical perspective. I already have my structural price targets that are outlined based on what's happening during this multi-day cycle. I then go into Bookmap and I find liquidity zones that are in confluence with my price structures based off this 12 years history. And then what it does is it helps me build a roadmap during the day. I can take the daily ATR, right, and say, I know, okay, on last 10-day average, we're moving 250 points, 280 points. And I find liquidity zones above and below the current price when I wake up, and I map out where I think, in accordance to the liquidity zones and my time and price cycle format, where price is going to go during the day. And so that's what I do with Bookmap. And I look at the CVD at a macro view, and then I spread it out during the day, because 90% of my trades are in the direction of the trend. So I look for the trend to establish itself. I look for a pullback to structure, kind of like a Scotty zones. I have my own zones. The same thing. I find an ATR zone, and then I use market pulse VPI, usually on a 5-minute window, to help me find the specific VPI spike with the CVD at my ATR zone, so that I can get in, and I can get in probably 85% of the time with less than 5 points risk by using the market pulse VPI with my ATRs.
Nice. Yeah. I mean, really, really good stuff to get that perspective, because then we'll look at the next one here. And then this is where, like, people, I think we needed to kind of set that floor or foundation. It's vitally important. And then, like, because then your next one here, this is where, like, you can get kind of, lost, or people can get kind of lost, because you're looking at a lot of stuff. I love this, though. You got your long criteria here, you got your confluences in here, and then you're looking for them here on the chart and marking them up. So maybe if we transitioned from that higher time frame here. I know this is a different setup or different direction here, but maybe start to walk us through a little bit, like the process here through your criteria.
Yeah, sure. So in this particular case, we were coming down in price, obviously. And on my particular charts, I have a structure zone that I label an ace trade, because it was something that was taught to me that is a structural setup. And the ace trade in general, if you look at some of my past posts, give you the ability to collect 50 to 100 points. And I'm getting 75 to 100 points with trade management on a regular basis. And if anybody doubts it, you can go look on YouTube. I post videos about this and charts and stuff. So you can look on YouTube or Instagram to find out more information, just to validate what I'm trying to say. But in this particular case, Scotty P has his ATRs. I have mine. This happens to be coming down to my ace structural zone. It happens to be in confluence with a Bookmap liquidity zone. So again, Bookmap is giving me confluence to a structure that I already have on my chart. Then on top of that, I use my checklist, right? My Bookmap checklist that is pretty much the same every single time I come into this trade. I am looking for a market pulse VPI spike co-joined with the CVD. And when I see that, if I have sell sweeps into stops or sweeps in, buy sweep into stops, either direction, depending on what direction we're looking at, and then I have the spike in volume followed by the opposite volume. So in this case, I've got sell sweep down into sell stops. You can see the sell stops down there. I have icebergs down there on top of that. I have the VPI spike into the liquidity zone, and then I get immediate buy volume to come back to push the price up. And then on top of that,
in this area here, right?
That's right.
Okay.
And you can see that I talk very significantly about surfer icebergs because they are a big tool to use when you're analyzing data. And I don't want to spend too much on icebergs right here, but just to let it be known that another iceberg popped up here. So I get the confluence of surfer icebergs. I got my ace zone, liquidity zone. I get a double bottom with a higher low. So now you see that higher low on the right-hand circle over there, which also matches with a rising market pulse VPI spike, because down there at the bottom, the right-hand spike happens to be higher on this side. Now, I do want to caveat, it's not always higher. So, but when you do see this at a significant zone with a higher low, man, that is a buy signal all day long, especially if you have an iceberg above you, because iceberg surfers always want to get retested. Okay, they just do. So this has so much confluence on this trade. All I'm trying to do is show you the confluence of everything in that checklist right there. And then on top of that, I don't mention it enough on the trades. And I think I actually saw something in the, trying to remember what channel it was. It might have been General Chat. Kiev or what's his name, 155, I can't remember off the top of my head, was asking, hey, isn't it kind of confusing to have all these market pulse sounds going off, 5 different sounds? Well, just recognize you don't have to have all the sounds on at one time. So you can see on my chart here, I actually have all the market pulse tools on both NQ and ES, and I actually have it on NVIDIA too. But what I do is, in order to not make it overload my brain by hearing all this stuff, I actually just leave the sound on for the ES market pulse volume pressure. And that's the number one I use. But if you just start paying attention, it's almost like a tick strike type sound. You have a sound for going down, you have a sound for going up. You put your sound on and you see these sweeps into stops at these low when you get these market pulse VPIs. The sounds will help trigger your mind to direct your eyes to look on the Bookmap chart if you're not looking at it at that point in time, to see these structural setups right here. So very important, in my opinion, to have the full package of Bookmap tools at your disposal during trading. And again, if you do these market pulse VPI trades and you have confluence with them, you can enter into trades with less than a 5-point stop and bag 10, 20, 30 points. If it's a trade setup like an ace trade, then with trade management, right, you can leg in, leg out, get pullbacks, add to the pullbacks. You raise your stops and you let your winners run. And I'm telling you guys, you can start bagging 50 to 70 point, 75 point, 100 point trades on the NQ. It just moves like that. And particularly since, the first couple months of the year, when we're seeing stuff move 300 points in a direction, I mean, you can catch more than 20 points. So people need to get out of their mind that if they're so used to just trading the ES and they're just hoping to get 3 to 5 points, maybe 10 points on the trade. Listen, learn some other trade setups that are based off of structure, okay, that you can see on Bookmap, plus maybe Scotty zones, my zones, whatever, Fibonacci's, liquidity zones, all that stuff together, and start learning how to capture more of the move. Because number one, you're going to capture a larger trade and pay less commissions on it, right? Because you're not getting in and out all the time. You start building some confidence by doing this on sim, and you'll end up becoming a much more profitable trader.
Yeah, excellent. There you go. It just walks us through just a couple of things, like a simple things that I just kind of popped out to me here. Was you mentioned the higher liquidity down here, and then you can also see the target and the high liquidity up in here, right here.
That's right.
And from liquidity to liquidity, basically, it's just this happens so many times. It's just kind of how the market works. But the also, like, you document it really nicely here. You start to see this volume transition, right? Especially in here, and that's when you know. And if you mix your kind of volume with your structure, like there's buy volume above this structure. That's
Right.
when you know that it's more likely to come up and test another area of high liquidity. And you can see that transition taking place in that volume and that liquidity. Well, the liquidity zones kind of just outline where price might be headed. Yeah, nice one on that. And let's see, what else did I have here? Yeah, this one. Well, oh, one of the things I wanted to mention in here, which would be great because, like I had mentioned earlier, we have this Carmine Rosado event coming up on Wednesday, and he's going to talk about his trade, replay mode and debriefing and going through his trades. It would be great to see in here, where you're getting in, where you're reducing, where you're leveraging. Because this is next step type of stuff. The first step is having a setup, and trusting that setup and knowing that it works, and you make some money, a little bit of money out of it. Where you really can make some money is when you start to leverage that when the risk is reduced, and you can just take kind of a regular trade and knock it out of the park. Yeah, Crash, I would love to see, I don't, if it's possible, if you could, maybe in the same time you're trading, hit the the buy or sell button over in Bookmap, and try to maybe show that so we can get a feel for some of that trade management, because you got a really great way of managing your risk.
Yeah, it's going to take some practice for me to do it on Bookmap. I got to be honest with you. So I know Donkey experienced it. He trades with me during the day too, and he's seen my live chart in combination with the Bookmap chart. I have such a system right now, right, with my Sierra chart. It would be a transition process. I'm not saying I'm not willing to do it, but it would take me a while to learn how to do the order entry and all the ATM strategies that I use within Sierra chart. And transition that over to Bookmap. So maybe that's a project we can work on in the future.
Sure. I can spend some time with you and go through some of the functionality. It's pretty
Yeah.
simple, I think it's a joy trading from the Bookmap chart, but because you have the liquidity map right in front of you. Anyway, let's see. Anything else I wanted to mention on this one? Yeah, the replay mode. No, that's pretty much it. And this one here, I think you talked about your stop loss, and then again, we can talk about like structure, liquidity, and volume. I mean, you got high liquidity down here, and something that I don't know what you're going to mention here, but what I kind of saw in here, and if you're talking about, one was a stop, getting stopped out, but then getting right back in, and I can't wait to hear about that. The From that previous image, and just looking at the volume in here, like we're not getting that same kind of volume up in here, and trading up into these areas of high liquidity in here. So it's more probable, and this is Donkey setup, in fact, that you're going to get something like this into the high liquidity down here. I would imagine, just because, like, see how the volume here in your volume delta bars is just dropping off. And then, a nice move right into it here. But anyway, that's what I just saw. I just wanted to make that connection with volume and liquidity, and then let you walk through the stop out and getting back in.
Yeah, so this happens a lot on NQ. NQ goes up and down, and it depends on what time of day, right? Are you in the lunchtime slog, as I call it, where it gets a little more choppy? The traders on Wall Street are at lunch, and it just doesn't, follow through with an impulse, slight pullback, and continuation of the trend for whatever reason. So it's time of day, it's the scenario, what kind of day is it, what kind of cycle is it, what kind of intraday cycle are you in? So I'm analyzing all that stuff at the same time. But in this particular trade, yeah, I entered into the trade. I don't remember exactly how many points I got out of it, but what I do is I put this almost on every single chart now, is I leg in, right? I see some structure. When I see a breakout of that structure, so I leg in on the market pulse VPI and the liquidity zone and my crash zones, right? And then when I see the structure tell me to add, so it'd be somewhere over on the left-hand side where I first entered into the trade.
So where did you enter on this?
Somewhere over here on the left-hand side. I think it was slightly more to the left.
Over in here someplace.
Yeah, exactly.
Okay.
I'd have to go back and look at this particular chart just to be exactly sure. But from what I remember, is I think I just did basically that little spike there. It might have been the one to the left before the iceberg showed up, actually. Okay. And then, I leg out at points of structure, at liquidity zones, at places like VWAP, at maybe at the test of the surfer iceberg, right? Because you don't know when it tests that iceberg surfer. Is it going to bounce down and come back and retest the lows, or is it going to get gobbled up? And shark bite that surfer. I say shark bite coming up from below, right under the water, and shark biting that surfer and then continuing to move up. When I leg out of those places, though, I always want to be using the banker's money, or the dealer's money. So when I have the opportunity to leg out, let's say I do, a lot of people want to do 2 minis on the ES. I don't do 2 minis. I'll do 20 micros. So when I leg into my trade, I may leg into 20 micros, and then let's say I take 5 to 10 off here, and then I leave another 10 to run to the next zone. But every time I leg out to put some money in the bank, I then raise my stops. And I raise my stops based off of a couple things. It could be structural points. It could be liquidity zones. It could be a surfer. It could be a fractal. And then I'm very disciplined about this because I am not afraid to get in a trade, get out of a trade, and then re-enter. Because I want to get that 20 to 30 points from that market pulse VPI spike. I'll get out up there at that iceberg. I'll get out up there at that liquidity zone right around 1207 area. Yep, that you see that spike. And then I'll raise my stops below the last structure zone. And if it comes back and stops me out, then, and in this case, you can see it hit the structure up there, right? The liquidity zones. And then it starts going sideways. And then if you draw a rectangle around that zone, kind of a tight one, you can see where we end up breaking on the right-hand side of it, up a little higher for me, that kind of WM type formation, right? Yeah, as soon as it breaks down from there, I'm like, I'm done. So I will get out and maybe I reverse depending on what I see, or I wait for another pullback. And in this case, I actually just waited, watched to see what it was going to do. And we had another market pulse VPI spike there at that lower liquidity zone that actually got fully tested, where on the left-hand side, it didn't get fully tested over there at the 1202 range. Yeah. So now we're tagging that. I see the market pulse VPI spike. I see a little bit of volume coming in with the green dots. And I go, okay, I'm going to add. I can take 5, 10, 15, 20 points. But all I do is keep, as the runs up with that little impulse move off of the spike, I just keep raising my stop. And I get an easy 20 points every single time I do this on the NASDAQ. So nice. 20 points here, 20 nice. Points there, 20 points here, 20 points there. Leg in, leg out, raise stops, let your winners run. So if I legged in like 10 to 20 right here, I would put like at least 5 micros way up by VWAP. And so that if an impulse moved up really quick, it doesn't catch my last couple runners that I want to have. and I just keep a target up there because I have a bracket order, right? So I have my stops and then my targets above it. And in this case, when I leg in, I leave some of my bracket targets up at the top at a much higher zone that I think maybe we have the potential to go to, and that's how I let my winners run, because I raise my stops, but I put my last couple micros up at a higher point to see if I can get a longer run.
Yeah, yeah, yeah.
One of the
Great.
things on
It
the
it
chart that I kind of noticed, um, right now you're just looking at the basic chart. You got a lot of like stop and iceberg aggregation. You can kind of like tweak your settings there and probably get a little bit cleaner there, as well as there's just a lot of noise in Q. Have you looked at the Trader Map add-on, the Trader Map Pro add-on? Because you can
Yeah, you
filter
don't.
order size out quite a bit and then use that as kind of like a confluence there. And you'll see a lot cleaner some of this order flow stuff that you're pointing out in your notes.
Yeah, Jack, great comment. And I actually do that. If you look just in the last 2 days, I actually post a couple Trader Map Pro charts because I run. This is just my personal setup. Okay, I have the ES, I have the NQ, I have the NQ Trader Map Pro because you see the liquidity zones without all that other junk, the stops, the
Yeah,
sweeps.
I think it's really useful in NQ over ES. I don't think it's necessarily as useful in ES.
Yeah.
I think that the filtering in NQ is way stronger.
Yeah, so I do. I actually have the NQ and the Trader Map Pro NQ side by side. So I'm actually looking at all three: ES, NQ, Trader Map Pro NQ, and then I actually have Microsoft, Apple, and Nvidia. So I'm watching all of those charts. I have 8 monitors, so I have all of those charts open at the exact same time.
Cool. I wasn't sure because in the image it just looks like super noisy because
Yeah.
that's just how NQ is. There's not much
Yep.
you can do with it.
No, you're right.
Just one more thing, and then we'll move on to Donkey. Something really great about this is, you're trading your setup, and you it came down below. Obviously it came down below your entry. Yet because of your trade management, this was not a loss; it was a winner. And I just think it's so important. Like solid trade management can take like a loser and turn it into a winner. And this is an example right here. You're looking for your setup, and it didn't work out. It failed, and yet you took a chunk out. It came back down. You entered back in. You had your criteria again for entering, and you took some more back out of it. And this is still, I mean, this is looking like a downtrend in here. It looks like it probably went back over, but doesn't matter. If it, all of a sudden a whole bunch of buyers came in and it spiraled up. The trade management in here is just it's just a really important part.
Yeah, if you have trade management, right, you can do this in an uptrend, a downtrend, a sideways market. It really doesn't matter. Obviously, there's different setups for each situation, but if you look from left to right, all the highs and the lows are on within the same screen here. So it's not like huge, massive moves. So I've posted a lot of other charts where it's just a sideways market, and I'm just going from VPI to VPI, right? So again, it depends on the situation. But if you get in with a tight stop, you leg out, you raise your stops. If you get stopped out, it's okay. You've already got dealer's money in your pocket,
Right.
ready to go to the next trade.
Right.
And then just redo it, rinse, repeat.
Right. Yeah, exactly. Guys, I'm sorry. We've been really good about like time management in here and not today. My apologies. Last week or the last time, last week we had Jack present, but the week before, Slowdown went through, and in more detail he went through some charts, and I thought it was great. So I kind of wanted to try that again here. But I can see that I let it kind of spiral a little out of control here. I'm sorry. So, but this is really great stuff. Thanks, Crash. And sorry, some of the coaches, I know that you probably have some feedback But we'll open it up a little bit more with Donkey, and then we want to get to Stan too. Anyway, yeah, thanks, Crash. Great stuff. So let's go into Donkey here, and this one I just loved. I loved seeing this. And there was just a bit of feedback that and things that we've been covering in here about using the setups checklist, and then also imagery. This was Slowdown's idea of showing the imagery on the chart of the exact setup that you're looking for. So you've got your criteria, you've got your checklist, numbered checklist here. You're pointing out onto the chart where your checklist is unfolding, and then you've also got your image up here, your diagram, schematic of what you're looking for. And I can only think that this is helpful. And this is your setup, Donkey. You've been looking at this for quite a while. It's a beauty, and in fact, we saw it on Crash's chart there a few times as well. This kind of 3 hits to the low, and then the break, or this kind of wedge, and then the break to the upside here. So my first question was like, are you finding this helpful using setups, checklist, and image? And then we'll take it from there. And
so, excuse me. So the question is very specifically, is the checklist and the image helping?
Yeah.
I don't want to ramble on. Okay, so I've had this checklist and I have it loaded into a Google sheet that's on a small screen to my left. And it changes colors when they're all checked. I had some, Excel wizardry to make that happen. So I've had the checklist on my own for, I don't know, a couple of years, and the checklist has changed, but yeah, having the checklist is almost mandatory. Anytime I start taking losers, and then I do, the gut check, the come to Jesus talk, I can always say, well, I didn't have them all checked off here. So, the checklist is a really good best practice. If I start, a lot of times I'm trading such low time frames that I'm doing it subconsciously, the checklist. But anytime I start taking losers, I make a conscious effort to, grab a Post-it note and click the buttons on my other screen to make sure the checklist is being satisfied.
Yeah.
And then the image, I've got binders and binders of hand drawn images, and it's a little tedious to get it all back on the computer, but yeah, it's always useful for me to spend time with my winners, and they don't always look this perfect, but yeah, I'd say both of those are really helpful. And if you're not making money and you're not doing it, you ought to start doing it. If you're making money, just, do whatever you're doing.
That's a very sound advice. Yeah. I mean, it just seems like in the academy, we just it felt like there was kind of a little shift here from marking up charts, kind of order flow content and phenomena, and then turning that into something a little more filtered, and then you're getting into your checklist, and then you know exactly what you're looking for, and you know what it looks like too, and you're matching the two together. And it seemed like it started to resonate with people, and that's why I brought it up, because it was really great to see, because before you had a lot of stuff on your chart, and this is a lot cleaner than I don't know, like a few months ago. So
Yeah, I appreciate that comment. I'd say it's kind of I've been trading for feels like 7 lifetimes at this point, but I was new to Bookmap. So as you would suggest or recommend, it's like at the beginning, I'm trying to drink from a fire hose and I want to mark up everything so that when I go back, it's all there. I'm still seeing a lot of stuff that I'm no longer putting on there for, I guess some of it's to tailor it to the academy and what you guys have recommended. But it's also becoming subconscious what I'm looking for on Bookmap. So it's not as, I'm not processing as much myself. So there's no need to put it up there. But yeah, I appreciate that comment. I think that's a predictable journey for somebody who's learning a new platform.
Yeah, absolutely. No, it's great stuff. And I don't know if you could go through your checklist here. Walk us through the trade and
So
what you look
this,
for.
I spent the better part of the last year and a half trading. 99% of my trades were ES, and so this is evolved for the Nasdaq, which Crash got me on, which is great. So enthusiasm, it's very objective. If there's not a very recent 25 point or more move, and I could probably adjust that to 50 points at this point, but then there's no enthusiasm. So why are you trading if there's no movement? So that's like the that's almost the first criteria for any setup that I ever look for. If it's not moving, go for a walk. So enthusiasm is very objective, 25 points or more. Exhaustion, I know in the Bookmap glossary, there's a definition. I've had my own definition of exhaustion from other things for years, and I'm looking things for exhaustion off of Bookmap are very specifically extremes on the subchart, um, increasing size of volume dots, and then there's a price action component also where the waves, clearly this was coming down into my pattern, and the waves, the the consecutive waves down got smaller and less enthusiastic with less volume, so that would qualify as exhaustion for me. Now, failure and exhaustion kind of overlap. These waves down, the third, fifth, and seventh wave, uh, are exhaustive waves to me, and I would qualify that as failure to continue lower. And then the holy grail is that seventh one that failed to break the fifth one. So you get a little micro high or low with a little subchart mini divergence there. Um, and in general, after I've seen 2 or 3 waves of failure, so like the third and the fifth wave, the wave 6 up, say it's 10 points. I've got a limit order sitting there on my chart. Once I see that wave 6 up, say it's 10 points, I'm going to drag it to the 50% of wave 6. So that's how I'm managing my entries, because this happens so fast sometimes. And I don't want to enter once it's already broken out of the pattern. I feel like that's where people who I might want to sell it back to are entering, and I'm trying to get inside the pattern. Um, so that's my mechanics for entry. But first, 25 points, and then I got to see some exhaustion and failure, and none of this matters. So there's 2 very, very objective things. Enthusiasm is a very clearly 25 point or more move, and then levels are very clear. It's open, high, low, close, liquidity zones. That's 100% objective. So there's 2 nuancy things sandwiched in between 2 very, very, very objective things. None of what I just said matters if there's not some level to trade off of. So, I don't care what system or setup you're trying to trade. If it's not moving, go for a walk. And if there's no level, you're just throwing a dart. And I don't handle losers very well. So, I'm always looking to try to take whatever I can get or slide in a break even stop as soon as I can. So I focus on a number. I kind of stole this from the Norden method stuff. I redid my stats, and it's win plus break even rate, not win rate, that matters to me. And as long as my win plus break even rate is above literally 80%, I can, sleep at night. If it starts drifting below 80%, I'm uneasy.
All right, great stuff. So, yeah, no, I mean, the exhaustion, your definition is fine. Like, Technically, we're looking at kind of much smaller structures, but over this kind of period here, on the move down, you're just not getting a lot of selling, and that you can see it in your CVD, like starting to pick up. You can see these pockets of buying in here, starting to pick up, and then there's a little bit of selling here. It starts to wane in here a little bit. It really starts to wane here, and then you're seeing this, finally more and more buyers, and then you just too much pressure. But yeah, no, I know a lot of traders that kind of looking at a little bit higher time frame, a different definition of exhaustion, which is great.
So the other thing I would note to this is anybody who's been at least attempted to trade for longer than 6 months has been taught some version of an opening gap trade. New York open, New York close, and anytime I see a drop or an enthusiastic drop or impulse up, I'm going to handle that the same way I would on a New York opening gap. So I want to see it fail on either side of that gap and then try to make a run to the middle of the gap or all the way through the other side. I'm not normally going to be holding on to it beyond the mid gap because I'm not interested in pullbacks. So
Yeah, yeah.
the very basics of this is just a traditional gap trade.
Yeah, nice. All right. Well, let's move on to like something else in here. I mean, then you've got the same setup in a lot of cases in here. Boy, I don't know which one you kind of prefer to go over. There's a lot of stuff on your charts.
Yeah. Okay. If you look at that one,
This one here.
Yeah. So just I can again just cut me off if I'm being too verbose, but I have my own version of VPI that I've had for years now. It's Donkey Delta that a buddy of mine and I coded, and it's the algorithms, of course, probably different, but we're attempting to do the same thing. It's delta percentage or VPI. That's what you see at the very bottom. I won't spend much time on that because that's kind of my own thing. But I think this is a good chart to look at because you can see some people are scaling out to book profits. I scale out because I don't want any, like, I'm de-risking. I don't consider it a way to make more money. I consider it a way to not lose money. So anytime I start getting a little antsy, I start pulling some of my take profits and hoping they get hit. And you can kind of see, if you could imagine the emotions behind this once it starts working. So it makes it all the way to my 50% target, which was the 50% retrace of the drop. And then it immediately rejects off of that. The second that happens, the second it rejects off of that dash yellow line after I've been proven right very quickly, I'm thinking, oh, what an idiot. Why did I not take this off right here? I could have booked my 15 points and, left the computer. So it comes back about almost 10 points against me. There's almost a 0% chance that I'm going to hold on to the whole thing the next time it gets up to that retrace. And I've already moved my stop to break even at that point. So I wouldn't want anybody to ever think that it's easy to perceive on a static chart, but there's not much time to make a decision. So you have to know the setup inside and out. Some people go the journey of lots of setups and get good at all of them. I'm kind of a hyper focused guy. I like to focus on one thing and know every single detail about it and not try to do too many tricks. I know other tricks and sometimes my trades turn into those, but if I've hit target and didn't take it, it's coming off as soon as I can get it back up there. So I'd say that. And then in the black and red box, this would be for anybody who's trying to learn how to use the subchart. If you get a good one, the ideal situation is that you would ride the subchart lines from one extreme to the other. And if I were more disciplined or more patient with that, I believe this particular trade went up another, I don't know, 40 points if I had just waited for even just price change, which tends to move the fastest, to get all the way to a green spike. If I had just waited for that, that's another 33 points without much heat. So, from one extreme to the other, almost the same way, stochastics would have worked 15 years ago, but it doesn't work like that anymore. From overbought to oversold kind of crap from stochastics, it actually works with the subchart. So that would be a best practices thing.
Yeah. I mean, it's tricky in a sense because I mean here, your entry down in here, and you nailed it. And the uh, and you got your 50% retracement line. It comes right up to, you got some structure here as well. This is kind of where it dropped from. And you take your partial profit in here, and then what you're talking about though is like this initial move here. A lot of times on the smaller time frame, it did its move, and then it turns into a higher time frame
Right.
trade, and you're kind of like unfocused, or at least I find like unfocused, and I'm not quite ready for that sometimes.
Yep.
And then you're like, oh man, that was the biggest opportunity and I missed it. But I got what I wanted. I got my setup and that was it. But I got to be kind of aware of the higher time frame traders starting to come in, because now they're kind of waking up to this, and then now they're looking for something a little bit more. And it, like let's suppose it, just for example, like let's say it's a trend line here, and then it starts to break here on a huge volume,
Right.
and then you're just like, oh man, I was focused on this setup here, but
Right.
yeah, I hear you on that.
I know a guy. I pop into Crash's Discord from time to time. I know a guy that's generally probably legging in where I'm exiting my whole position pretty often. I would say after several years and banging my head on a lot of different walls, my strength has evolved into pretty good entries. The little bitty losers, I don't like them, but they don't ruin my day. So my strength is finding good entries. So whatever it gives me, I take it. And if this entry, if you actually scroll down to my charts on the bottom, it looks pretty fancy on Bookmap, but you can see on the chart on the left, which is I think it's at least relative to the time frames that I'm looking at. This is a 100-second chart, so that's 3 bars per 5-minute candle. You can kind of see that it was like not the world's hardest entry. Like it had already shown its hand, it popped up and then dropped again. So it's almost like an order block kind of entry, but I'm prepared for that. And then if you look at my version of delta percentage on that 100-second chart, these 2 spikes below the green line that I have on the red part of the subchart there, or the lower study, kind of showed me that the bears had run out of gas.
Over here, I'm sorry.
On the left,
on the left,
where
okay.
you see where it says I can look for a long entry.
Yeah.
Okay, so those 2 red bars that spike below kind of the bearish mean told me that the bears had probably lost the ball for a little bit, and I'm looking for an entry anywhere in that opaque box, and that's the same box that was on Bookmap. It's just at a little further down, but so I've got a limit order sitting there for, I don't know, 10 minutes. And then finally I see the price action start to fail there again. So I'm ready to go.
Yeah.
So.
Nice. Yeah. I mean, I don't know what you're looking at here in your subchart, but I mean, just tons of selling, and there's your flip.
Yeah. Yep. Exactly. So you can think of that as the same thing as VPI kind of. I've got some other stuff involved in that, but yeah, it's yeah, that's it.
Nice. Excellent. So let's see. I think if you don't mind, Donkey, we'll move on with some of Stan's stuff. It's already over an hour.
Yes. So there's really not much to talk about mine. I post the same thing every time I post a trade because this is what I look for every trade. So
Yeah, no, I mean, it's like you said. I mean, here it is again, right here, and back on March 1st, and beauty. Here's your reversal pattern up here, and your wedge, rising wedge here, and then you got the fall here. So yeah, I really like it. Like Crash had talked about this. Is what is such a great thing about, like, talking to different traders. Crash has a quiver of like 5 different setups or something. You're a master of one, and you know exactly, all the nuances of what you're looking for within your trade. So whatever makes you money.
yeah. So and I'll shut up after this one statement. So this is a really good follow up on the enthusiasm. If anybody dives into this one, like I rationalize and justified enthusiasm here. This you can clearly just see from the price action that this is a slow grind up. That doesn't really qualify as enthusiasm for me. So this trade that I'm entering is probably not a great trade for me because there's no excitement, and I want excitement because I don't feel like staying in it for longer than 3 minutes if I don't have to.
Yeah, good point. I mean, like, the volume starts to pick up on it, but it is a grind, as you said.
Yeah.
This is the excitement here, actually.
Yeah. Man, it got excited because of me.
Excellent,
All right.
excellent.
Thanks, guys.
Thank you, Donkey. All right, let's move on here, and Stan, you are up. So let me get your Notion up here. Hold on.
Yeah, perfect.
And thanks for hanging in there. And yeah, I kind of lost a little control on the time management. But let's jump in. Whoops. Okay.
So yeah, hope you can hear me well.
Yes.
Okay, good. Yeah, that was a ton of good information. So perfect. I will start with Rupt. I don't know if he's here.
Yep, I'm here.
Amazing. So yeah, thanks for the recurring posting. That's a great job overall. I like the way that you were looking at your checklist. I think it was missing on your other slide. Like, so there is the first picture, and then just below it you have the second one. So on the first one we can clearly see like you were looking for a specific setup. On the second picture, I think it's something that was missing. So maybe more clarity will be more helpful. Yeah, so in case of continuation, I think it would be great to have more context view. Like you clearly recognize like the consolidation, but it will be maybe better to have like to clearly see like the impulse move, like the behavior of the market. Like for example, there you enter, so I put the red circle, the first one on the left. So you clearly recognize like bigger dots coming in, and then
this one here, Stan, or oh yeah,
yeah,
that's
exactly.
one. Okay, yeah.
Yeah, but I think you could maybe wait for the other one, like on the right side. You maybe do not have the same relative volume, but overall you can clearly see like buyers trying to move away from the consolidation. Plus your liquidity, then I highlight in a blue rectangle, and look for the flag pattern over there. Like, yeah, you can see clearly like the impulse move with a lot of buyers, then yeah, sellers start to lose conviction, and then buyers step back in. Because so Yeah, where you enter the first one, so you stay, yeah, just stupid trade, just ignore it. So you clearly stay in a major consolidation, and your low volume pullback is maybe not as low as yeah. So yeah, you grad it 4, and I think yeah, that was not a real low volume pullback.
Yeah, so you're saying that the first trade during that big impulse was probably ill-timed, and it was better to get into
yeah, maybe
the
a
dark
little
blue
bit.
circles, squares.
Yeah, exactly, and maybe a little bit after, like, yeah, waiting, then buyers really bring the price out the structure, like to really see the conviction to go maybe higher, to explore higher.
So where would have been the more optimal, like right at the top of that zone?
So I would suggest, so you can clearly see like the other impulse move. I think it's where you took all your target, the second red cycle.
Right.
So you have your impulse move up there. Okay,
Right.
then you have like kind of small consolidation, exhaustion. So you have clearly your impulse move into liquidity on the right side, Bruce. Yeah, just right. No, yeah, left. The
Where
second,
again?
yeah, the second red circle.
Ah, this one here.
Yeah, exactly. Yeah.
Okay.
So there you got your steep move into liquidity. Then you got your exhaustion, some liquidity showing up, and then bias came back. And I would potentially more looking at there to take a long, like clearly see more the conviction of the bias to lift the price, to explore higher. Yeah, and take part of this behavior.
Oh, interesting. If you got in there, where would your stop loss be?
So I would take, in this case, so you got your exhaustion. Yeah, yeah, very low conviction of the seller. Yeah, exactly. Over there, yeah. And so I would look for the liquidity and just put it below it. Like you're looking for a direct continuation. If it's not going in your favor, just cut it.
Oh, okay. Interesting. Yeah, I tend to play continuations as like a pullback. So I
That's a
look for
hedge.
some impulse move, a pullback to liquidity, steps in, defends the pullback, and that's where I get in.
Yeah, exactly. And you can have a short stop loss and just take the move. So yeah, that was for the first slide. Then there is another one. So for the second one, I have. So you haven't put any checklist, so I don't know what you were especially looking for. Like for example, there I don't know if you were just buying because for the front run liquidity or what you were exactly looking for. But that's great for the second entry. Like you recognize the anomaly, like the book flip, the rejection of the seller. So sellers got absorbed. Then liquidity came back directly and buyers step in. So that's okay. But for the first entry, I'm wondering why you entered there.
Yeah, let me try to remember this trade. Sorry, this is probably before I started really using the checklist, and so that's really helped clarify my second. Okay, I see where the red circle's at. Yeah, I think what I was doing was I was looking for a continuation setup here, if I remember this trade correctly. I think what I didn't, I think I FOMO'd into that first entry. The market was moving kind of fast that day. So when it pulled in, I saw that liquidity on that first blue box. And so I decided, I kind of want to take a small partial entry here and see what happens because I didn't like that the liquidity was lower and didn't really get tested. So I wanted to see it actually test, and then I would enter in full size, which it did. It did. The liquidity, the price dropped into it, transacted, and then we got our impulse move out. But I think the first entry was just like a little FOMO bit, and just kind of, okay, I'll take a small partial in case the market just runs away. If it comes down and tests that liquidity, then I'll take a second and go full size and my normal size in terms of a trade entry. So I think that's why I took a kind of a early entry on that size. A little bit of FOMO, just wanted to get a piece in case the market ran away from me.
Yeah, no worry. Just I think it's very important to take to give it attention to the order flow. Like really, like you can clearly see where you enter. Firstly, you had no bias. Even if you had like this liquidity, there were clearly no bias.
Yeah.
But yeah, overall, that's a great job. I like the way like you were making notation of your pre-trade and post-trade. So yeah, just keep doing it. I like the most important thing for me that will be obviously the behavior of the markets, like trying to catch the move and follow what the market is telling you. But yeah, stick with what works for you.
Sounds good. In this trade specifically, I know it's kind of like hindsight. Where would you think the optimal entry would be?
So I wouldn't trade that.
Okay.
Clearly, I wouldn't take any one of those. Maybe slow down boot, but I'm not sure if it's spring as he would define it. I'm more like flag pattern and looking for continuation. So I would potentially enter higher, and when I saw anomalies in markets, and I think it's very important as traders recognize those anomalies, like the behavior, the liquidity, volume. All of those can give you insights. But I wouldn't enter in it. I would be interested to see after you have a big spike in the relative volume with big dots trading into liquidity. Then I would potentially look for this shallow pullback plus this liquidity that shows up and potentially follow the move if buyers step in.
Okay.
So yeah, I wouldn't enter at the low for sure.
Gotcha. Yeah, that's a completely different way that I kind of trade pull continuations. But so would it safe to say it's kind of more like you have like a momentum kind of that's what you're waiting for, like this momentum push.
Yeah, exactly.
Got it.
For me, that's why I'm trying just to follow what market is telling you.
Got it. Okay, that's interesting. I'm gonna chew on that for a little bit and see how I can kind of augment my strategy a bit with that.
Yeah, sounds good. But
Thank you.
Just keep posting. You're doing a great job.
Thanks. I appreciate that.
Pleasure.
Yeah, Stan, really good feedback. That's just excellent. I mean, like, there's a lot of momentum here to the downside, and and a lot of volume here. Trading into high liquidity. That's great. That's really good. That Rob, that you're looking for that, and maybe like you said, maybe a little early on that, but I have to really compliment you here on the your trading here, and it's you're vulnerable, but this is where you can learn so much. You just got really good feedback from Stan, and you can avoid all of this risk here. And where you're getting out is where you can actually consider getting in. So you would avoid this in here, and these would be your buys maybe up in here. I don't know what, it's kind of small time frame to see here. Well, no, it's 5 minutes each vertical dotted line. But, it's looking pretty good that this is going to be your trap. There, let me recall this, that this is going to be your trap volume. And this is going to be your stop run or at your move to the upside here in the momentum that Stan was talking about. So it is a lot to chew on. but I really really love showing your trades in here. We can give so much better feedback off of that.
Yeah, thanks. It's been a bit of a transition using Bookmap to actually trade through, but it's actually, once you get the hang of it, it's pretty smooth. I love how easily you can move your targets and your stop losses and just trail, and it's pretty smooth. I'm not using the DOM yet. I'm just still trading off the chart, but
Yeah.
little baby steps. But yeah, thank you for that. I really appreciate it. And that's excellent feedback. So if I could just kind of touch upon it, just so like I can take these notes. Sorry to take. I don't want to take up too much more time, but so you wouldn't get in that pullback, because I guess I'm trying to play it too safe. Maybe that's why I'm getting in down there, because I'm putting my stops, as you could see, like right underneath that high liquidity. But
Yeah.
you and Stan would actually get in during that impulse move out, and if it starts to just kind of roll back, you would cut the trade. As seems what I'm understanding.
Yeah, I mean, like you've got your, like Stan was kind of. Sorry, Stan, go ahead.
No worry. Yeah, just so I maybe didn't get all what you said. Could you just repeat it?
Yeah, so I guess the question was, and I guess the reason that I'm getting in those areas is because it's kind of, I'm playing it safe in a sense, like I'm using that high liquidity as a buffer for my stop losses. But it seems like you and Bruce were advocating, or at least your strategies would be more of, I'm going to ride that liquidity, and where I'm getting out, you're getting in, and just riding that momentum. And if that momentum starts to wane and starts to pull back on you, that's when you would cut the trade.
Yeah, obviously.
So looking
Go on,
at your
Jake.
trade just in general, right now, like your entry is right after a strong impulse move to the downside, right? So in the current context of what you have available, there's nothing to say that where you're entering isn't the top of where you're entering, and that's essentially the pullback for that downtrend, and then you could end up getting pushed and squeezed out to the bottom below that lower level of liquidity. Where Bruce and Stan are more looking at is once it reaches that consolidation point, basically like 2 minutes after you end up entering, you can see that consolidation right there. A break of that consolidation would be a much stronger entry. However, you'd potentially have more risk on the table than where your entry is, because I would still probably backstop my stop below that liquidity. So if I enter higher and I still use the same stop, obviously my risk is higher overall. However, there's a lot of different things you could use in that particular area. If you're looking at ES here, and this is something Crash mentioned, you could use micro contracts if you only use like one ES contract or two ES contracts. If you use 4 or 5, then you wouldn't necessarily need to. You could just scale out and then go risk neutral, which is a lot of what I do. So yeah, I would enter once you got a break of that consolidation pattern, because when you see consolidation, one specific thing, especially within Bookmap, you can visualize it. There are traders trading at that area. The reason we are consolidating is because we're chopping around that viable area. So if you reach that viable area and you're breaking out above it, that's good confluence to a trade. And you can see the pullback right on the right-hand side of where Bruce drew that line. It pulls right to the top of that consolidation. So I mean, it provides a good backstop there. And from there, I would probably start raising my stops up, which you end up doing in your trade anyway. You can see it. Yeah, there it is right there. So I would still follow the same techniques. I would just wait. But I do have setups that are very similar to this, and I just classify them as aggressive. If I have other confluence or I want to be aggressive for some reason, I'm allowed to do that. Like that's part of some of the things that I'll trade. So I don't necessarily think it's a bad entry. It wouldn't be my first line of entry personally. And I think that's what Stan and Bruce are saying.
Oh, got it. Okay, that's clear. Yeah, thanks.
There is nothing wrong with aggressive entries though, if you're accounting for them.
Right.
Yeah.
Go ahead, Bruce. Sorry about that.
Stan, go ahead.
Yeah, and just if you have a vetted stat, if you already walk
Yes.
to these setups and you know what you are looking for, that's good.
Yeah, exactly.
Yeah, overall, yeah.
I would echo that from Stan. Like he started off with the feedback of like a checklist. So this would alleviate that FOMO potentially, and you would wait because it's not meeting your criteria. And in fact, I mean, here you're actually adding more risk. Now it worked out.
Yeah, the more risk is where I would have. That's where I would have entered as an aggressive trade. The first entry, I think, is just a consolidation entry, and that's just chop.
Yeah.
Entering a chop is dangerous.
Mhm.
Like it's just rough.
The one thing though, like you know, and this is again part of what we're trying to do here in the academy. I mean, like Crash, if this was the NQ, Crash might have been getting in right in here, and he would be looking for that volume pressure imbalance into high liquidity, and he's like, well, he's anticipating this to unfold. But he's got reduced risk down here. He's being very aggressive, but he's also got his confluences. He's got high liquidity. He's trading. He'd be looking at your cumulative volume delta as well, and he's got his volume pressure and balance on market pulse. And then it's just a feeler though as a position, and then he's getting in full position back up into here.
Well, that's a good strategy.
So,
okay.
So yeah, I mean, lots of ways to slice and dice it, but I think the safest way is like what Stan was saying. Wait, have your setup and your checklist, and look for that turnaround because it hit your high liquidity, but wait for those buyers to start to come in and get that impulse going the other way.
Got it.
Yeah.
Thank you, coaches. I appreciate that. That's awesome.
Let's see. Let's go over. Boy, I don't know, guys. It's already an hour and a half.
Yeah, no worry. We can do it like next time.
Yeah, I don't want to burn everybody out. But we can give the Notion sheets to you guys. But Shark Blue, you are up here, and then Steven also. And some really great stuff in here, Steven, with you got your flag pattern and you're looking at it, and I mean, and your checklist in here. This is just great. It's just great stuff. Yeah, also Shark Blue, I can see you're looking at your 1 2 3 reversal.
As every time, as always. It's
And
great to
even
see
if your
this
trade wasn't covered live with the coaches, they still provided feedback, whether it's on your spreadsheets or in the Notion files. Everybody should look at these files because reviewing somebody else's trade is almost as good as reviewing your own stuff because you're going to gain insight into those things. And if it is your trade that you're reviewing, you can read that feedback and then try to adjust to it just as if we were talking about it. So definitely look at the files and take a look at them because this is the kind of content you're not going to really get anywhere else. So, and always have discussion if you have questions and stuff like that. By all means, ask questions. So.
Yeah, I agree. I mean, like, I just one last thing I want to say, and I want to let you guys have the final word because I've been talking too much here. David, jump in anytime as well. Just one more thing to mention in here of like, look at the feedback we can give. Like, it's pretty hard feedback, but that we can give though because Rob took a position in here, a few positions. Now we can give not only feedback on the setup, but we can also give feedback on trade management. It offers a much better layer of feedback. And like I said, we have that new journaling tool that you guys can use and trading statistics, etc., to take this a lot further. So use it and trade from the chart in Bookmap, and we can go into a lot more detail. So anyway, Jack, David, Stan, you guys have anything more that you wanted to add?
No, I've got another 30 minutes. So I'm going to go up into the voice channel up above, and if Vinny, Rob, or Alex,
we want to open it up. I think it. I don't know when you've been doing them, Jack. These sessions. Is it after the market kind of closes?
So I tried to do it. I tried to do it during the AT&T blackout, and that kind of threw a wrench in things. That was like a week ago or whatever, and then we had or 2 weeks ago, and then we had the Bookmap with Wayne that I needed to do. So I had to prep for that. So I didn't get to it this past week. This week I want to do it here Thursday. I'd like to do it right after our meetings, and then I'd like to do it at lunchtime sometimes because lunch is really kind of open for me. Because basically London closes and I sit sideways for a while, so it all depends on people there. But
yeah,
yep,
okay.
That's what I'll try to do, and I'll try to post when I'm going to do something like that too. So as long as they're checking the channel regularly, they'll see it.
Okay, excellent. David, we'll get you
no problem
up to speed on Notion. It's really easy, but it's been working really well for us. It was Slowdown that got us on this program here, but we can zoom in and out a lot better.
Yeah, I know it'd be good to be able to talk through and so forth. But yeah, some fantastic charts here today. So well done, everyone. Really good to see.
Yeah. All right. Well, thanks everybody, and we'll hang out with Jack in the breakout room there, the voice channel, and we'll see you. Thanks everybody. Thanks all the coaches, and thanks for all the great feedback or content you guys are making. I hope this is really helping, and we'll see you tomorrow in the All Markets webinar.
Fantastic.
All right. Thank you, everybody.
Cheers, guys. Take care. Have a good evening. Thanks. Bye-bye.
Bye-bye.